Welcome to this webinar, Why Technically Green Decisions Still Fail. So this is to be presented by Dr. Faisal Sheikh, who's a colleague of mine and is at the cornerstone of accountancy and curriculum design within a host of universities, and also very instrumental in chartered accounting through the FCCA. He takes a keen interest in sustainability and linking it to sustainability with employability for the relevance of practitioners. So this is an intriguing presentation. It's no doubt will create a lot of debate. We realize that in the environment of green technology, for example, a lot of it has to be significantly subsidized, but businesses need to wash their own face. So we will be giving an insight into why these businesses potentially succeed, but also why they fail. And as green entrepreneurs, we learn more from failure sometimes than just listening to those entrepreneurs that are successful. So this is an intriguing presentation, and I'm hopefully will create a lot of questions at the end, something that we may have to take offline at a later after the presentation because of time. Myself, I'm a sort of heavily been in sustainability throughout my career, and take a keen interest in supporting young entrepreneurs, particularly in their green initiatives. So I'm going to now pass you over to Dr. Faisal Sheikh for his presentation.
Good afternoon, everybody. This is Dr. Faisal Sheikh, all of the way from Nottingham, Trent University, in the heart of the city centre of Nottingham. So yeah, just very quickly, my background: I'm a principal lecturer and student experience manager. I like to describe myself as, especially when I was doing my PhD, a bit of a maverick. I am part of an elite group of academics who I like to call accounting Navy SEALs. We are professionally qualified, we have PhDs, and we are published as well, hence the hairstyle. So this is who I am. I'm extensively published, and I see myself as a practitioner academic. And as you can see, I am also heavily involved with the FCCA. I'm a vice chair of the not-for-profit sector panel and the Global Education Forum. Thank you. So today, we've got it's a great topic, but what are the objectives today? So first of all, there's something that I'm working on with my colleague in the background, Rob. It's something what I call the balance sheet diplomacy lens, because this is really going to be the lens that I'm taking, and it underpins the whole presentation. Then we're going to talk about something called what I call the Great Sustainability Awakening. Then we're going to have a look at some green accounting, and that leads very nicely into the measurement problem. Then we are going to get into something called green finance, which is becoming marketing, and we will look at some greenwashing issues. Then we will talk about specifically the balance sheet problem, and then we will come up with some the political economy of sustainability, and then we're going to try and give you a framework around 3 pillars to think about these challenges. Again, like I said, I'm a practitioner. I want to give back as well, and some recommendations as well. So there's some 10 practical recommendations, and then every good academic, we like to play Nostradamus and look into the future, especially with what's going on right now in the world. And so, we're talking about something what I call from ESG to environmental statecraft, and then there'll be some closing remarks. Thank you. So what is this balance sheet diplomacy? You know, this is basically it's a lens to have through which we can interpret economic, political, and strategic decisions through one fundamental discipline, and that's the balance sheet, ladies and gentlemen. The balance sheet, as you know, is made up of assets, okay, and then liabilities plus capital at the bottom, and it happens to represent the accounting equation as well. So at its core, what the BSD or the balance sheet diplomacy lens is asking is a very simple question. What are the real assets, liabilities, and the risk created by this decision? So it could be any decision, but we're looking specifically at green decisions, and are they sustainable over time? Because I think what it's important is to remember is that we need to look beyond with just the assets and liabilities, and what we will be looking at also and incorporating them as well. It moves beyond the rhetoric, metrics, intentions, and what we will be focusing on, okay, is the three pillars which I will be talking about as well: financial reality, institutional credibility, and the long-term sustainability of these commitments. So these assets are, something that we can break up current and non-current. Basically, these are not just tangible, these are intangible as well. So they are trust, stability, energy security, human capital, and environmental resilience. And I would argue, especially if you're a practicing accountant, you will have heard of the concept of goodwill as well. It's intangible, so it can be measured, and we can put a number on these things. And it's important to think about these issues. And again, with the liabilities, they extend beyond debt. So we're looking at deferred cost, ecological damage, systemic risk, and political fragility. So ultimately, what we're trying to do in this is that the BSD approach, it treats the world as a dynamic, interconnected balance sheet. Dare I say, and with every decision, it will reallocate value across time. So this is basically what we're doing here. So now we are looking at the great, what I call sustainability awakening. And at this point, I have got to, before I start talking about this, I have to mention one of my all-time favorite natural historians from the BBC, David Attenborough. He's just turned 100 years old. Why do I mention him? Because since the inception of television, he has been traveling around the world, and he has been taking us, to places where we can only imagine of. And, you can actually see him when he was in black and white, and now it's in glorious 3D color. So I think that's played a big role in what I call this great sustainability awakening. So what's happened is that over the past, especially 50 years, governments have started, and especially in the last 20 years, governments have committed to net zero targets. Corporations have issued sustainability reports, and it's a great source of income for the auditors and the consultants. Investors have poured literally trillions into ESG labeled funds. And from my perspective, we teach climate accounting and green finance. Yet paradoxically, the global environmental crisis continues to deepen. So, for example, the atmospheric carbon concentrations continue to rise. Biodiversity is accelerating, and we're all experiencing this right now. Extreme weather events are intensifying. And the uncomfortable truth is that many technically green decisions fail not because they are wrong, I argue, it's because they are incomplete. And that's where the BSD approach comes into its own. And that's what we're arguing, is that environmental decisions will only succeed when they are grounded in financial reality, institutional credibility, and long-term accountability. Without these foundations, these are just aspirations, and they will just be pipe dreams. So if you want to carry on, please. So now we have seen, obviously, there's been a big rise in, the concept of green accounting. Okay, and the last decade has seen extraordinary developments in environmental reporting. And these are some of the major for frameworks that you will be familiar with: the Task Force on Climate-Related Financial Disclosures, the EU Corporate Sustainability Reporting Directive, the International Sustainability Standards Board, science-based targets. And this is just, I am just scratching the surface, ladies and gentlemen. The last time I checked, there are more than 200. So it's actually become a bit of an intellectual minefield right now. So and ultimately what these frameworks are trying to do is to integrate environmental risk into financial discipline. And the principle is simple. What cannot be measured cannot be governed. However, sorry, can we go back? Yeah. So, like I said, the principle is simple. So, what cannot be measured cannot be governed. So, research suggests that ESG reporting increasingly influences corporate financial performance, investor behavior, and consumer behavior as well. So, as you know, right now, there are many products in the Western world which have the Rainbow Alliance. And, customers are happy to pay that extra premium if they know, for example, that their coffee has been sourced ethically. So it's not just organic, but it's ethically, and the farmer, for example, is getting a fair and livable wage. So this is growing the growing importance of environmental governance in capital markets. So in theory, this should align corporate incentives with environmental outcomes. Now, unfortunately, the results have been mixed. And now we'll look at the measurement problem. So what is the measurement problem? I mean, one of the most, and and on the PowerPoint, this is my sort of, this is the basic synopsis, but one of the most persistent challenges in sustainability governance is the measurement problem. So ESG ratings, the problem is that ESG ratings vary dramatically across providers, because if you're going to use a different framework, you're going to get a different result. And like I've said, different methodologies are producing conflicting results. There are data gaps are widespread because there is no consistency here. Academic research shows that the ESG literature still struggles with inconsistent definitions, and that's very important as well. There are varying methodologies, and there is insufficient consideration of contextual factors influencing sustainability outcomes. This matters because sustainability strategies are built on these matrix, and this is what all of the our annual reports are full of lovely pictures, and we've hit this target, we beat this target, this is our carbon footprint. But the problem is it's all inconsistent. So when the measurement system is unstable, decision making is going to be distorted, and from my perspective, it is open to, dare I say, abuse as well. So the reality is that executives will optimize for the metric, so rather than the outcome. And so what's happening here is that when matrix, any of these KPIs replace judgments, what's going to happen is that we, from a balance sheet diplomacy perspective, we're going to see a recurring failure here. Institutions will adopt sustainability targets that are technically correct, publicly impressive, but they are financially disconnected. So there are many examples here. So I can quote you. So many companies commit to net zero targets, and it's great if you just listen very carefully. 2050. Why 2050? Now, it's a very convenient timeline because it will be beyond the tenure of current executives. So it's not my problem, in effect. So as we say in football, we're kicking the problem into the long grass. Others invest in carbon offsets rather than structural emissions reduction, something which was happening during the Qatar World Cup. Still others improve ESG scores through selective disclosures rather than operational change. Now, there's also a growing body of research that warns sustainability reporting can be symbolic. As I was saying, it's becoming, and I'm being polite here, but it's open to abuse. And, you're following the letter rather than the spirit of the law, as my lawyer friends say. And this allows organizations to manage reputation rather than transform behavior. And that's the key thing here. We want to transfer. Sorry, a colleague just said that they can't hear me. Fakru, can you have a look at that? Sorry. It's in the chat.
Yeah, but I can hear you. We're hearing you.
Oh, we can hear you.
I can hear you as well. We can all hear
good
you.
stuff.
Yeah, I
Okay,
think
good stuff.
it may be a technical problem.
If you kindly please check your own system.
Okay, all right, okay, all right. So as I was saying, the focus is going to be to follow the spirit rather than the letter of the law. And this is obviously leading to something called greenwashing. And so between 20 and 22, another example, roughly 20% of climate-related ESG risk assistance incidents were linked to greenwashing claims. And there is a body of established literature around this, which has been going now for the last 20 years. So if we want to go to the next slide, please. So, yeah, that one. Thank you very much. So when green finance becomes marketing now, and this is the problem. I love marketeers. I love marketing. But again, it's where are the intentions with this? So what's been happening is there have been several high-profile cases which illustrate this creative tension between these sustainability claims and the financial reality. For example, in 2025, regulators fined a major asset manager 25 million euros after determining that its ESG investment claims did not match internal practices. Similarly, a French court ruled that the energy company Total Energies has misled consumers about aspects of its environmental commitments. So these cases reveal an uncomfortable truth. Sustainability has become a powerful marketing stroke public relations tool. And when environmental narratives outrun operational reality, ultimately what will happen is the credibility collapses. And that leads us on very nicely to the balance sheet problem. Do you want to move forward, sir, please? So, the balance sheet problem. Another reason, technically, green decisions, they're failing because they ignore the balance sheet constraints of transition. Again, just going off on a tangent, as I always remind my students, if you do not have a start and an end, you do not have accounting, ladies and gentlemen. You do not have a balance sheet. So we need a start and we need a finish. Now, this is why the balance sheet is so powerful. On one level, we can argue it's historic, okay, because we're looking backwards. But as we're going into the future now with AI and automation, everything is real time now, actually. And there are great dashboards right now. So you can actually print out a balance sheet for the day as well. But really, you need a start and a finish. So we're assuming 12 months here. So they ignore this, the balance sheet constraints. Again, sorry, I'll answer that question as well as we're going on. Yes, I can send all of the presentation and the reference as well, in a later communication. Thank you. So again, what's happening with the balance sheet constraints of transition is energy systems, transportation, infrastructure, and industrial supply chains. Now, again, we've got to realize these were built over decades. Okay, so now replacing them is going to take literally trillions in capital. So, consider the energy transition. Everybody's talking about renewable energy, but that we have a capacity issue. It is expanding rapidly, yet global energy demand continues to grow. Many countries, therefore, face a difficult balancing act between decarbonization, energy security, and again, I think as we all speak right now, that is a big issue right now, economic stability. And then when the sustainability strategies ignore these trade-offs, they often collapse under political pressure. So if we can move to the political economy of sustainability. So if we elaborate a lot more on this, so if we think about the political economy of sustainability, so what we've got is environmental policy does not operate in isolation, ladies and gentlemen, beg your pardon. It interacts with labor markets, inflation, geopolitics, and public trust. So all of this is interconnected. This is why I'm really emphasizing this approach that me and my colleague have developed. So, for example, think about the 22 energy crisis, which vividly illustrates this. So suddenly, obviously, prices have gone up in Europe. There is geopolitical disruption, and many governments, rightly or wrongly, prioritized energy security over emissions targets. See? Now, subsidies were introduced to protect households and industry, and there is a cost to this. And this is one of the things that I've said at the start with the liabilities. They will accumulate. We're kicking the problem into the long grass, as we like to say in football here. So the subsidies were introduced to protect households and industry. Now, again, this is not hypocrisy. This is political reality. So technically, green decisions, again, so it's all wonderful coming up with these targets, these lovely frameworks, but they have got to survive political and economic stress tests. Now, if they don't, the minute the next crisis will come, they will crack. So now, if we have a look at the framework, please. Next slide, please. So, what me and Rob are arguing is that, we need a framework to think about sustainability. And from a BSD perspective, successful environmental governance requires 4 structural conditions. Think of them as 4 pillars. So the first one is, and I'm going to go into each one. The first one is financial realism, institutional credibility, systems thinking, and long-term incentive alignment. So what do I mean by financial realism? So sustainability strategies must recognize capital constraints. Green investments must be funded through public investment, private capital markets, blended finance structures, and again, Rob is an expert in this. What we're trying to get here is, without credible financing mechanisms, climate pledges just remain symbolic. And that was what was going on in the 90s. There was a lot of this when I can still remember as a student, yes, everybody was talking about that. And I can still remember a very famous song, There Is a Hole in the Air, the ozone was the big thing. And it's all symbolic. We can have a concert about it. We can sing about it. We can dream about it. But, money talks at the end of the day. There has to be substance there. But then the next thing, institutional credibility. Environmental commitments must be embedded in governance structures. Okay, so if it's not going to work and there is no buy-in, especially at the top, it's not going to work. So again, one of the things that I am arguing is so to ensure this credibility, this is now where the audit profession has got to pivot, and there has got to be independent climate auditing, transparent reporting standards, regulatory enforcement, which is going on. Hence, for example, some of the big cases that I've mentioned. And the rise, again, an interesting thing which I picked up is there has been a rise in ESG litigation globally, which suggests that accountability mechanisms are becoming increasingly important. Now, so if we think about The again, it should have been well, it doesn't matter, but it's the long-term incentive alignment. So we'll look at that first, which is the third pillar. One of the greatest. Sorry. If you go back, sorry. That's okay. One of the greatest structural weaknesses in sustainability governance is the mismatch between short political cycle. So anybody who's a prime minister, president in a democracy, maximum 4, maybe 5 years if they're lucky. And then I love this thing, 2050, 2070, 2100. Well, you may not even be alive then. So again, you're just kicking things into the long grass here. So it's this short-termism that we have got to tackle here. So executives and politicians rarely hold office, like I've said, to bear. The key thing is the responsibility for these long-term outcomes. Who's accountable at the end of the day? Okay, they've won the Nobel Prize, and they're sat there now, somewhere enjoying their retirement. So, and it's important that we align these incentives, therefore, and that requires mechanisms. So, for example, we could have long-term climate bonds, multi-decade infrastructure finance, and sovereign climate funds. Now, and then the final pillar, which I think is so important to this, which I think, again, underpins generally the balance sheet diplomacy approach, is systems thinking. We are all interconnected. So environmental crises rarely exist in isolation. A classic example was COVID. If that crisis, that outbreak had taken place 20 years ago, I don't think the whole world would have shut down. It would have just been contained. But now everything is interconnected because our international travel. Again, the other thing as well, which I've not touched about, which is another big thing in this, is social media as well. So again, everything is, it's live now. It's one of my terms. I hope I don't offend anybody, but I call it political pornography. There's no filter. Everything is going on, whether it's a war, whether it's a crisis. It's just, on speed dial. Everybody has a view now. So climate change intersects with, as I was saying here, in terms of systems thinking within this context, energy markets, food systems, urban infrastructure, and financial stability. So effectively, if this is done properly, okay, it can work. And I'm going to give you some examples of this. So there's not all doom and gloom, and these are some really great examples here. So despite these challenges, we've got some great examples. My favorite is Denmark's wind energy revolution. So, again, I just have a bit of I declare my interest, a soft spot for Nordic thinking. Denmark just sort of decided in the 90s that we're going to invest in, wind energy infrastructure, and today now, wind supplies most of the country's electricity. Okay, so this success was not driven by slogans, but by consistent long-term investment and policy stability. Again, I like to say to students with something like this, when I'm saying long-term, I say, think of it as on one level, a never-ending marathon. Okay, this is not an MMA battle, or you're going to win the 100 meters and win the gold, and you take the accolade. This is going to be day in, day out, week in, week out, decade in, decade out, year in, year out. Another classic example where this has worked has been Norway's electric vehicle transition. Norway has achieved the world's highest vehicle adoption rates through a combination of, so this is where they've done some really deep thinking, tax incentives, charging infrastructure, and long-term policy clarity. So the transition has succeeded because these incentives were financially credible. And again, I am discussing, the end point. So, I'm going to come up with another example. I'm sure, and this process is messy. This is the glory of being a human at the end of the day, I believe. There is a messiness here. But again, where are our intentions? Where are we going with this? And do we have the ability to pivot? And this is, I'm sure, which was going on. It just didn't happen overnight. And then, again, I would say, China, the great panda in the room. I mean, wow. They are the leaders in, renewable energy, and they are the largest producer of solar panels and, electric vehicles. I'm not trying to plug BYD, but my goodness, do I love the marketing there. Buy your dream. Wonderful. It can be achieved, but it takes vision. So this was achieved through an industrial policy, supply chain development, and a long-scale capital deployment. So now, if we go to the next slide, so some recommendations. So, I mean, these are decisions for failing governments and corporations. And again, this is all, at this stage, a lot of this is just blue skies thinking. After this, probably me and Rob will have to write some white papers, but this is what we're here to do. So to prevent, some of the recommendations that we have. So to prevent green decisions from failing, governments and corporations should adopt this, the following sort of suggestions. So the first thing is introduce what we call climate balance sheets. Environmental commitments should appear on organizational and, dare I say, governmental balance sheets as measurable liabilities and assets, and it can be done. So, for example, it's Sweden right now. If you want to check the tax affairs of the Prime Minister, it can be done. So if they can do that, with the tax affairs, I think this can be done as well. Second, integrate environmental risk into financial regulation. So central banks should incorporate climate risk into stress testing and prudential regulation. So again, when I'm saying stress testing, that's when you're doing the war gaming. You're looking at the scenario planning. Think about the impact on the risk. Because again, before I carry on, remember, we've got to realize, yes, there may be aliens out there. There may be other life forms. But as we speak right now, we only have this beautiful marble, in the cosmos called Mother Earth. It's only us right now. And it's so important to think about this. Number 3, establish independent sustainability audit bodies or incorporate them into the big 4 like FCCA, ICAW, or my American cousins, the American Institute of Certified Public Accountants. So that's where, again, there's an opportunity there for my auditor colleagues, because that's where the environmental reporting should be going, and that's where the auditing will go. Because the reality is, as we speak right now, AI automation is absolutely double. I think audit personally, another topic for another day, but it's over right now because we have, as I say to the students, what do you bring to the table? A piece of software now or an algorithm can audit, doesn't need a promotion, doesn't need to be told how wonderful it is, and it will go on and on. So where we come is where the judgment is, and so there's an opportunity there. Number 4, link executive compensation to verified environmental outcomes. Incentives must reward actual environmental impact rather than the disclosure quality, and that will stop some of the greenwashing. Again, this is actually my research area that I did. I looked into accounting fraud, but anyway, this isn't fraud, but this is, again, it's got to be honest here. Again, a lot of this is coming down to vision and what are your I would say corporate intentions are. Number 5, develop a global carbon accounting standard, which is going on. I appreciate but we need consistency across jurisdictions. And again, I would say there are folks in the GCC and internationally, including the Chinese, who've got these huge sovereign funds. Start investing into the green. Countries rich in natural resources should invest in revenues in long-term climate infrastructure. Number 7, price environmental externalities transparency, and this is a big political hot potato. Carbon pricing, ecological taxation. Nobody likes to pay their taxes, but that will help the alignment. Again, I'm happy. That's when the marketeer should come in and we can get the message there. Again, we only have one blue marble here, Mother Earth. Number 8, invest in climate adaptation infrastructure because mitigation is insufficient. Flood defenses, drought management, and resilient agriculture are all essential. I'm nearly there. Number 9, encourage technical innovation. Look, AI, we have graphene, there is so much going on, and I think a lot of the universities should come out of their ivory towers and start talking to each other's. The sciences and the humanities and finance can come together, which is what we call interdisciplinary research and thinking. And finally, build a culture of environmental accountability. Ultimately, ladies and gentlemen, sustainability is not just a technical problem. It's a cultural one. And again, I've already been alluding to this. Intention, vision, focus, it's not just about me and my corporate or national interests. There are global interests. There is a bigger picture. If you don't like that, you got to think about your next generation because they will pay the price for this. So if we look at the next slide, please. So nearly there. So again, this is where we've just done a little bit of going into the future. So what me and Rob are arguing is that we're going to move from ESG to what I call and Rob call environmental statecraft. And given what's going on, and as we speak right now, I mean, going off on a tangent, sometimes I think what's going on right now is, and if anybody has seen Dune right now, the movie. Right now, oil is spice, okay, and it explains a lot. I think some of the geopolitical, tension, which will continue. I mean, God willing, I think it's going to stop the problem, but there will be something else. Now, how can we avoid this? And I think it's there. There are great opportunities. So I'm saying that in the next decade, what will emerge is a geopolitical competition, not merely just for military or economic dominance, but for environmental resilience. So countries that successfully integrate sustainability into their economic systems will enjoy enormous strategic advantages. The biggest thing is energy independence. And I know, the great panda in the room, China, are working around the clock because right now they are relying on 45% of their oil imports through the Strait of Hormuz. And they know it's not sustainable. Same for another big powerhouse of an economy is India, and next door is Pakistan as well. So there will be, and so that's why this big move to solar. And to make it economically viable. So that will lead to technological leadership and financial stability. So those that, who can ever deal with this, okay, it will work, I will say. And I think there's a deeper lesson here, ladies and gentlemen. Technically, green decisions fail when they focus on appearance rather than structure. Real sustainability requires credible institutions, transparent accounting, disciplined capital allocation, and long-term governance. That's where the systems thinking is coming into this. It requires treating environmental risk with the same seriousness as financial risk. I mean, I think right now, everybody knows with the problems that we're having, the ecological crisis. We're beyond DEFCON level 5. It's DEFCON 10 as we speak right now. All of the targets have been broken, and we are point of no return, so some scientists are saying. So the planet's ecological crisis is ultimately, it's a governance crisis right now. But I am bullish. I believe that we can solve this issue, but it starts now. So, and if we ignore it, no amount of green rhetoric will suffice. So, in closing, the final slide, please. So some closing remarks. My two heroes are Aristotle and Ibn Khaldun, one of the great Aristotle said, he reminded us long ago that wise governance requires moderation and foresight. There's a lovely quote there for you. And again, somebody who I've just recently discovered, the father of sociology, the great Muslim historian Ibn Khaldun, he warned the society's collapse when leaders lose sight of long-term stewardship. And this environmental crisis is therefore, it's not just a technological challenge, ladies and gentlemen. It is a test of whether humanity can govern itself ultimately with the wisdom required for this beautiful marble. And, that's it. And ultimately, it is a balance sheet question for civilization itself. Thank you.
Thank you for that, Faisal. Before we take the questions, because we missed a slide, can we go back to the Green Talent Award rounds, just as a reminder, and then we'll go into questions and answers. But this will help you, some of the teams, in terms of their presentations and their investigative research. If we go back to the number of rounds, I think it's post slide 10, round 1 to the presentation. Is that the slide? Yes. So just a bit of an update. I think we've extended the applications from March 31st to allow more teams to enter. But you can see the various rounds that we're going through for this Green Talent Award. Case studies will be released with a submission date in April and the announcement towards the end of April. Then we move on to round 2 with another case release and another submission deadline, and the results announced in June, into the next gateway, which is round 3, with a case release and in June, and results announced on the 15th of August. And then it culminates in the grand final, where we will look at presentations and submissions on the 20th of September, and we will have the awards on the 21st. So if we go back right to the end of the presentation where we were before, one of the things that I would reinforce, Faisal, which Faisal has sort of eloquently presented, and the tensions and the challenges, and what the role of the accountant is in terms of the balanced scorecard and the different drivers that are out there, with some very rich examples. I'll always say to you, if you're going to engage in sustainability in any genre, in any capacity, in any role, you have to understand, what is the business need? Is there a business need? And the business need is driven by regulation, policy, innovation. And we find that the challenges is that for this technology to be embraced, to effectively help us with what are scarce resources, those resources being energy, water, minerals, in creating biodiversity, green open spaces, looking at the way that we engage in our transport, a host of things, but effectively it's the resources that we live by to save the planet. They're scarce resources. And if we are to introduce new products and new services which are deemed to be more sustainable, there are 2 fundamentals that we need to ask ourselves. Is it feasible? Does the technology work? Can we get planning permission? Can we get support for this? And secondly, is it viable? And viability is through the lens of, can it be financially sustained? Can the business model sustain itself? Now, that's before we even get into the business plan and we start launching it. And my experience has been, is that when you're engaging in new technology, you're often ahead of the game. You're often a trailblazer. And to get the technology to work must not be underestimated. It takes years and years of research and development. There's lots of troubleshooting. There's lots of needs for error proofing. And it's not a given that the technology will work. And then even when the technology works and you can prove it, then we get to a situation where is it viable? And what we're finding around the world is that different governments, different companies, different philanthropic individuals are heavily subsidizing it. So at the moment, these businesses are not washing their own face. And so sustainability is often driven in success, such as the Scandinavian countries, because they have run effectively at a loss to get their electric cars, to get their wind power, to get their tidal power, to get their hydroelectric schemes. They're effectively running at a loss. And the problem you have in society is it's short term, it's myopic. Shareholders want to make a return quickly. And we've got a tension between the easy money, the fossil fuels, and taking countries off those fossil fuels onto sustainable renewable energy where they don't make the money. And they've got to run it at a loss. And eventually it will wash its own face. So it is intriguing when you look at society as a whole. We know that we've got to do the right thing and manage these resources which are scarce, whether they be minerals, whether they be energy, whether they be water, whether they be protecting biodiversity, whether they be protecting agriculture, protecting jobs. We have to do the right thing. So you have to be strategic. And so as groups that are embarking on the Green Talent Award, don't underestimate the need to analyze strategy. Well, I call it situational analysis. And sometimes we need to measure things that we haven't measured before. And this is what Faisal is introducing you to. And in addition to the balance sheet, you're finding organizations embracing in what we call the Green Balance Scorecard. And you'll see accounts that are reporting on non-financial metrics that link to sustainability. But we have those that live in society that are green consumers and know this is the right thing to do. And we have those that in society that are what I would call the traditionalists that find it very difficult to make that change. And make that change because of the ulterior motives of making money. Make that change because they don't want to take the risk to go down that route of recycling, minimizing their waste, engaging in looking at how they wear their clothes and making their life of their clothes last longer. So it has to come from the people. But a lot of it is managing change. And the fascination is that in different parts of the world, what we would call developing countries, they've had to engage in sustainability to survive. And they're the ones that the developed countries should be learning of. So it is a fascinating subject. And I hope that you take on board what Faisal has told you through the case studies, through the recognition that, and looking through the lens of a balance score, of a balance sheet, and how we measure things, and measuring for governance, that you can change your habits, you can influence people. And I would ask you not just to be green ambassadors, but I would ask you to embark on being green coaches. Coaching is a really important thing in our careers and our lives. And if we can start to change the habits and behaviors, we have this opportunity to make change for good. So any questions from Faisal's presentation? And Fakrul, if you could register a few questions for Faisal to take on board. But thank you very much. That was hopefully created some intellectual debate, and people go away and think about how they can use this, how they can engage in it, and how they can find more about what will make a sustainable green business successful on the basis of what is causing current failure and what is causing the challenges. So over to you, Faisal, and over to Fakrul to register some questions.
Thank you. Thanks, Rob. Thanks, Faisal, for your time and valuable insights. For participants, we will send the recorded webinar to you in the email. So you will get the whole session through the email. Kindly check your email following the webinar. Hopefully it will be going to your inbox tomorrow. By this time, we are open to have some questions for a few minutes. So if you have any questions, please ask it.
Hello, good afternoon.
Good afternoon. Thank you.
My name is Abdullahi Ali Ibrahim from Nigeria. I need to ask whether this program, why green, technical green is failing. Do we have any, if you need to, if our company need to report any of the, can we have the template for this program? Maybe if we need to report any of the our research, maybe for you to publish. Maybe do you have any template in your program, sir? Thank you.
First of all, thank you. Okay. First of all, obviously, I think if you look in the presentation, there are some frameworks out there. So I mean, I think you need to choose one, a framework which is going on within your sector and has become established. But again, me and Rob, we're happy to work through with Fakhrul as well. If you would like any sort of suggestions, any pointers on how to capture this information, and again, if you leave your information with Fakhrul again, sorry, beg your pardon, it's a long day today, sorry. With Fakhrul, we're happy to get in touch with you, and then we can give you some suggestions.
Thank you, sir. Thank you for the program. Thank you for your knowledge. Thank you, sir.
Thank you very much. I appreciate that. Rob, I think this is one for you. We've got colleagues asking about round one, the open case challenge. Or Fakhrul, if you want to take it.
Yeah, Fakhrul, do you want to take that offline, maybe? That individual microphone is still off. Fakhrul.
We have extended the deadline for submission, so no worries. We will be sending the guideline tomorrow on 25th of March, and we'll give plenty of time for the submission. So kindly wait for the email with the details. Hope this helps. Okay, we have received one question from Yavuj Gunawali. How do you incorporate social sustainability into the balance sheet? For example, regarding the European energy crisis in 2022 is partially due to social problem of people are suffering.
Yeah, well, the thing is, first of all, again, I'm happy to take that offline into detail, but the main problem was, it was not stress tested. There should have been some thinking around this. There was a crisis already brewing up. Okay, so the people, the regulators, the CFOs, they should have been on their horizons. So, but specific examples, again, I can get in touch with you and we can send something. But again, what I'm talking about here is more of a mindset as well. These issues, they accumulate. You see, this is the big thing here. So, for example, again, if we take the COVID crisis, again, so many soft loans were given because the whole economy basically tanked. Okay, but obviously, how do you finance that? You're going to have to borrow the money, and there's going to be a cost to this. So it will get kicked into the long run. I said, well, it's okay. Future generations are going to pay, and we are suffering now because of that. So this is what will happen. So it may not happen immediately, but there will be repercussions, because the beauty of the balance sheet is, okay, it will continue until it becomes insolvent, and it doesn't, and you finish it, and a country will continue into the future. So again, for example, we all know on one level, America is technically insolvent. Okay, technically it's insolvent, but what's happening is there are different approaches to the world. Dare I say, the military complex is just funding it. So the idea is, well, think of it, or if you're a company, if I can, take on the extra loan, the extra liability, but if I can bring in the revenue, then it will get covered, because as long as the interest is getting covered, and the capital in the future, so no problem.
I'm Mohamed Nasiki. I'm a professor of management at a business school in Agadir in Morocco. Thank you for your excellent presentation. This central theme in this turbulent times characterized by convergence of technological, ecological, and geopolitical transitions, organizations are called to actively engage in these shifts and leverage their ingenuity and transform risk into opportunity. But considering the small and medium-sized enterprises, due to their regarding them limited resources, do they have this possibility to engage in such operational and sustainability?
Okay, at this point, I will like to answer, but I'm going to get Rob to come into this one, because he has got some great examples of that, especially in the UK context. Rob, do you want to take that on? Oh, the mic isn't working. Okay, yeah, okay. Well, yeah. I mean, I'll have a go.
Rob,
yeah.
can you please check it now? I think
okay, it's working. Go on, Rob.
Yeah.
Go for it.
I'm working now. Yeah. So, if for small, the question was regarding SMEs.
Yeah, how can okay, at that sort of multinational level, they've got funding, they've got resources, but a one-man band, or an SME or a micro.
Yeah.
How?
So it's an excellent question. I've got experience of this, and
that's why I brought you in.
Yeah. I'll give you a couple of examples. In the sort of waste to energy and in the waste recycling sectors and within the farming sectors, what we find is that economies of scale rule success, and regulation. There's a cost of regulation. So when you're compliant to the environmental agency, when you're in compliance to planning, when you're in compliance, you have that there's a hidden cost there, and so it's not a level playing field. So what you find is that the big corporates have a bit of a monopoly, and if you want a small entrepreneur or a family business or a small business, you're wrapping it up in what I call sellotape. You're restricting it through all the policies, all the procedures, all the legals, and there's a huge cost, and it becomes too excessive. So the stimulation of fledgling micro small businesses to engage in innovation and sustainability tends to be done through a philanthropic route. So we've got a tidal energy scheme in Swansea Bay, and it's created. It's only been able to be supported through very high net worth individuals who realise that their money that they're putting in is sunk funds. There's going to be no return. It's going to take a long time. Equally, I found that the traditional entrepreneurs take a lot of risk. And this is where it gets really exciting for me. And I made a case point where we were looking at thermal cracking, the thermal cracking of to gain carbon credits. And these thermal cracking plants tended to be very high capital expenditure. They would require a lot of feedstock, and it was only accessible to large corporates or individuals with lots of money. So we found one individual who said, no, wait a minute, I want to do thermal cracking on a very small scale. And he was a son of a farmer in Devon in the UK. And he created a podcast on his journey of trying to do it in a small scale, because a lot of farmers in the UK are having to diversify. And he wanted to prove that he could create what we call this charcoal, which is the end product, that would then go onto the farm to increase the yields of the crops. And he would then be collecting through the feedstock carbon credits to feed the thermal cracking machine. And he would have to run it himself. And he's proven that he can do it on a small scale with low capital expenditure. So the answer to the question is that you do have to box really clever when you're a small operator, a small, medium-sized business, a fledgling business, a startup. You have to look at grant capture. You have to look at ways that you can subsidize this. It's not going to wash its own face. It's not going to fund itself through positive cash flow. Eventually, the business model becomes sustainable, and then you can look at private equity investors. And this is where it gets interesting in venture capitalists. We found that venture capitalists only existed in the for-profit sector. Now, venture capitalists are coming into the not-for-profit sector, and it's deemed morally and ethically okay to make a return from their investment, and at the same do good in a situation that is not for profit. So the landscape is changing, and there are new mechanisms out there, such as social impact bonds, social bonds, and also as an academic, as a professor, you should look into the body of research on social returns, because measuring social returns justifies the business case. So, for example, I was involved in the reinstatement and restoration of a £125 million canal that was formerly used as navigable transportation of freight, and then the railways took over, and then we reinstated it and restored it. But our business case was based on what would this canal do in terms of, for the local community, it would create a green open space, it would create better living, and but how would we measure it? How would we measure it? And so measuring social returns to justify the business case to capture the grant is where the actual professor, the academic, actually has a real consultancy role to a major projects to say, well, actually, this delivers not just financial returns, it delivers non-financial returns because it creates social benefits, because it creates less burden on the health, on the healthcare, on the health service. So this is really, it's pretty, it's not new. It's not new innovation in terms of how we structure deals, but it's a different way of structuring commercial deals, how we capture grants, how we fund through crowdfunding, how we create social bonds, how we measure things that we've never measured before by using the Green Balance Scorecard to justify the business case to allow this project to happen. So, that's a bit of a long-winded answer, but there is opportunity, but we have to understand strategically how small startups and businesses can contribute. And at the same stage, what you'll find is that big corporates will often leave the smaller businesses. Take AI, for example. Look at peer crowdfunding and peer-to-peer lending. They will let the small operators prove it, and then after a certain stage, they'll acquire it. So there is a role for everybody in sustainability, whether you're small or you're large. Okay.
And can I please add to that?
Thank you.
Sorry, Fakhrul.
Yeah.
Just wanted to add to that. One of my favorite sayings comes to mind, which is, "Mother is the necessity of all invention," especially in the South Asian context. And what do I mean by that? If you don't know, the largest slum in South Asia is in Mumbai, and it's called Dharavi. Okay, I believe it's just 1 square mile, and it's got a couple of million inhabitants. But it's one of the most entrepreneurial places in the whole of South Asia, and it's generating tens of millions of dollars, I believe. I think it's getting into the hundreds of millions now. And in fact, Dharavi has become a brand, because what is happening there is that the local, so we're talking, one-man shop, just one shop, maybe 1 or 2 employees, okay? Recycling for them is second nature. 90% of the the goods are recycled. So I watched a wonderful documentary. There was somebody who makes suitcases there, and and they said, but when it breaks down, what will happen? He goes, we'll probably just recycle it. We'll find it again, and we'll just recycle it. So that's one example. Another classic example is is Pakistan. They are, I think, they were at one point number 2, I believe, second user of LNG, liquefied natural gas. Okay, way ahead now. If that would never have happened, for example, in the United Kingdom, because of all of the regulation and then the planning and things like that, because there it is a very entrepreneurial. Yes, there is problems of corruption as well, but money talks, especially in the third world. So if you can get it done, and you're hitting so many boxes there. So it's financially viable, and it's making good sense as well. So all the better. Let's bring it on. So again, a lot of this, I think, is to do with mindset as well.
Yeah, just to add to that, as you said, and I think I reinforced it. If you go back to the emerging developing countries, the way that the building products that they use, the way that they build their own homes, the way that they've had to survive, it means that they've been engaging in sustainability since they were born. Whereas the developed countries, there's been a lot of waste and a lot of wastage, and so it's intriguing. It's flipped on its head. We learn more from the developing countries, and I remember living in the Philippines, in Manila, and there used to be a big landfill site called Smoky Mountain. And unfortunately, a lot of the people had to scavenge from the landfill site to survive. But when you started to look at what they were doing entrepreneurially to create new products and to recycle and to upcycle, it was quite inspiring. And last year, on our Green Talent Award, a school from the Philippines, a college from the Philippines, won the award for their innovation to recycle their learning materials and create an upcycle shop. So it does come from young people. It comes from behaviors. And as Faisal said, the problem we've got in the developed world is there's a lot of bureaucracy. I'm involved at the moment with issues where we cannot provide enough electric points for cars to recharge because of the planning constraints. And this is really frustrating those companies that want to go onto electric cars for their staff, but they just haven't got enough points to recharge them, and they're being restricted by the local authority to get the planning permission. So you can see some of the issues that we have.
Is that okay? Okay. I think if we are not having any more questions, so we can finish it for today. Thanks, Rob. Thanks, Faisal, Sheikh. Thank you very much. Thank you for your time.
And
it was
thank you,
excellent.
Green Ambassadors. Thank you.
Yeah.
Thank you, everybody. Thank you, Fakhrul.
Thanks, everyone.
Thank you for the Edupro team, and thank you for attending. And first and foremost, thank you, Faisal, for enlightening us. And no doubt they can follow you on LinkedIn. And if they've got any questions, and also the collaboration that you have on your own research. So this is all about creating a community and a network to benefit for ourselves, whether we're practitioners, whether we're learners, or whether we're researchers. We benefit all. So hopefully the network gets stronger. Thank you, everybody. very much look forward to the next webinar organised by Fakrul and the team.
Yeah, thank you very much.
Thank you.
Thank you, everybody. Really appreciate that.
Bye.
Thank you. Bye.
Bye for today.
Bye.
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 www.eduprouk.com